And in last 2-3 years, we have realized that it is not the QGLP that is important, it is how much intensity you bring in practicing QGLP. So QGLP will remain QGLP, but what will go behind understanding quality of business, quality of management, growth, longevity of growth and quality, and what price you pay finally. So this mix of 4 things, there is no 6th parameter in investing. Good business, good management, growth, longevity of the franchise, and all this at what price you are buying. So you have to interplay of all these 5 variables. You have to arrive at and put in the portfolio. So this was the 20-30 years of committing a lot of mistakes on the way, lots of mistakes, and then learning that this is the right way. So we have arrived at this particular thing, and we have practiced in our portfolios. So for last 12 years, we have been managing value strategy that is a flagship PMS portfolio. The strategy has driven almost 20 times, 19.5 times in last 20 years, with almost 27-28% compounded return after fees, against the index of about 19% or something. So 8 times for the index, which itself is fantastic, and 19-20x for the strategy. The same thing more recently, in last 1 year, more rigorously has been applied in our mutual fund products, F25, 30, 35. So 35 is 1 year old now, and it has given us about 65-70% return. See what happens. You see the blue and red. You start just 12 months back, slowly it starts diverging. The quality QGL stocks, they start building up month by month, week by week. So it's good for short term, it's good for mid-term, it's good for long term. I hope this journey continues like this for all of the investors in these portfolios. And wealth creation studies and the journey will never complete. As it is said, the woods are lovely, dark and deep. This is for the retirement. But I have promised to keep, that we'll keep performing, and miles to go before we sleep. So I think this journey will continue of QGLP and practicing and bringing more rigor. And will be great if all the clients and all the friends, they join in this journey, not only in terms of investing, but also in terms of contributing what are the better ideas, I mean, from the portfolios, and suggesting that they know that this company is better and align in the journey. So that will be very good, and we are all together. All the money is, whatever I have earned or whatever company has earned is also in the same strategies. There is nothing beyond house not in this portfolio. We don't buy any individual stocks now. We buy only our own products. So alignment is total. So the journey is now, the clients and us, we are in the same boat. If anything happens, either way, we are all together. So thank you very much for patient listening. And I hope so we'll take few questions. Please avoid specific company questions, because it's not right to talk about the company. We don't know many companies. So we'll confine to more about the investing or anything else. I mean, macros, global macros, investing. But please avoid specific company questions. Thank you.
Hello. Hello. Yeah, Raamdeo ji, there's no question from my side. I just wanted to say thank you very much. You have shared your secret to all of us, and that's a very great thing. Thank you.
Hello. Am I audible?
We get a very different picture. And I would wish all the graphs that we see of growth and the Nifty becoming 29, today 9,000, or the Sensex becoming 30,000. if we adjust it for the inflation which this country has gone through, wherein, I might share with all the members that in income tax we have a cost inflation index. And if we look at that index, in the last 30 years, the rupee has depreciated more than 10 times. And when we adjust that for the sex movements, the growth phenomena which we see doesn't appear so attractive. What would be your response?
So, good question. I wish, Praveen, do we have that chart? Inflation, there's a chart. Can you just? So, we have this chart, what you're saying. I have for 34 years since BSE Sensex has started, that is 78 onwards. So, what happens is that the compounded inflation is about 8.5%. Okay. So, 100 has become, your 100 rupees has become 5.4, I think. The last number I have seen is 5.4. It is 1/18th. So, you're absolutely right in what you're saying. And your 3-year rolling SBI deposit rates, that's the only fixed income reference point you have for long period, is exactly 8.5. Sorry, the inflation is 8.25 and 3-year rolling paper is about 8.5. So, more or less it is same. So, the 100 rupees if you had given in SBI deposits, it would have become 18 times. And rupee has become 1/18th. So, you have gone nowhere inflation adjusted. See, what is investing? Investing is surrendering current purchasing power to gain more purchasing power in the future. Basically, you are saying, I want return inflation adjusted. So, by going to the fixed income, you are not gaining in purchasing power. Your purchasing power is intact. What you are buying 100 rupees 34 years back, you will get 100 rupees worth of stuff today also. But if you had gone to a stock market, you had bought at 100 rupees the index. Today index is about 50,000 come dividend. What you see 29,000, that's an ex dividend. If you accumulate all the dividend of 1.5%, it's about 48, 49,000. So it has become about 50,000. So it's about 500 times nominal. The inflation adjustment will bring it down to 1/18th of that, which will be about, I think, 20 times or so. Inflation adjusted in last 34 years, it will be 20, 25 times of what you had given that time. But during the same period, gold will be about 3 times, fixed income will be 0, 1 to 1. In gold, you will get 1 to 3, and in stocks, you will get about 20 times. That's the difference. Have I made it clear? Yeah. Yes.
Have you figured out a robust way of evaluating quality of management? I know it's subjective, but have you been able to put together an objective parameter and process? Because in your analysis, the Q of management and along with business is paramount.
Yeah. So clearly these are qualitative things. We have our checklist. And you get a book on checklist on all the parameters. But you have to keep they will give checklist. But how do you apply that checklist is your call. So if somebody is saying that payout has to be fair, they have to be fair to all the stakeholders, government, the employees, the staff, and the shareholders. So when you look at when you look at the application, so what kind of behavior? So first thing I look at for the management is whether they pay full tax or not. Is there any cash dealing? Do they handle the low end of the employees well? High end everybody handles very well. How is the behavior? That's why I want to meet the management in their office, because you can see the behavior there. Are people very scared of the top management? What kind of treatment they've given to the minority shareholders? Have they cheated in the past? So the list goes on, But yes, all these things, they definitely come in our, one is the competence, second is the intelligence, and third is the integrity. So integrity is very important. If the guy is not having impeccable integrity, see, in India you get all the managers which have competence and passion. But competence, passion with integrity, there are very few. And that's where your number of companies, they get reduced big time. Investable population, they get reduced a lot. But I agree that's a very difficult part of the QGLP. Judging quality of management is one of the most difficult one. Yeah, thanks.
Yeah.
Next.
Hello. How easy or difficult it is to identify, let's say, 100x stocks today versus what it was 30 years back when you started? Secondly, would you agree that markets have become more efficient, especially in India, versus what they were 30 years back?
What is the second question?
Markets have become more efficient versus what they were 30 years back in terms of the pricing.
Yeah, beyond doubt. I mean, that's what I said. I said 80s and 90s, they were primitive. I mean, you could read the balance sheet and go and buy a stock and you could make money. I mean, balance sheet used to come after 15, 20 days of the result, if you're lucky. Read that balance sheet and go and buy the stocks, you make money. You know, because nobody was reading the balance sheet. There were no guys who bothered about the balance sheet. That was the 80s. Today you have to go to the boardroom. People are doing trading even ahead of time. Nanoseconds, you know, you want 9:15. I mean, SEBI is saying that every single information has to be given to you through the BSE, anything worthwhile. So it has become far more efficient. Quarterly results, every single information, every single significant information. You get a big contract, you have to be telling. You buy a big piece of land, you have to be telling BSE. I think there is a massive efficiency. Now coming to your first question, I think it was about you. What was the first question? You said, is it easier to find 100x stocks now? Yeah. So I see you get very few ideas, very few opportunities to see 100x stocks. After this study, I realized that for 100x stocks, we get lots of them. Almost all the 47 companies I would have gone through in one way or other. The problem is we didn't have enough patience. I made a lot of money out of Infosys, but I bought it at about 1,000 rupees, sold it 10,000 rupees. So it was 10x in 2 or 3 years. But it didn't become 5,000x for me, or 1,000x out of that. So the patience part is very, very important. So actually I have lived only one stock which is 100 times for me. That is Honda, Hero Honda, which I bought at 30 rupees and I got paid 1,200 rupees dividend, and today it is like, you know, this kind of price. So you don't get to live actually. So the real challenge is not to find stocks. There will be multiple stocks which will become 1,000 times from here. Because this is exponential economy. When the economy moves from 2 trillion to 3 trillion to 4 trillion to 5 trillion, and it is globalized, the opportunity is no more local, it is global. Where is the big money made? You look at which is your most expensive stock. TCS. This is not an Indian company. They are not catering to Indian consumers. This is the most global company. So the opportunity is global now. So, but then every company starts at 200, 300 crores kind of situation. Look at Sun Pharma. I mean, it has started with less than 1,000 crores kind of market cap, and today it is the largest and most admirable global company. Today there is a merger happening of Mylan and Teva, which is going to give birth to $100 billion. So clearly this space is very opportunity space. Many companies will be born even better than Sun Pharma will come up in this space. But they would be today maybe 500 crores or 1,000 crores. They will become 50,000 crores, 1 lakh crore, 2 lakh crores. When Sun Pharma goes to become 5 lakh crores, these guys will become 50,000, a lakh crore and all. So there are opportunities and many more opportunities. In online, I think it's after 10 years, we'll realize that 2000 is not change of the century. It is change of the era. Pre-internet and post-internet. Internet will redefine a lot of businesses. And you see your life is being run by that. If your smartphone is off for 1 hour, you feel uneasy. Okay?
Hello.
Yeah.
Yeah, hi, Raamdeo.
Hello.
Yeah, I can hear.
Yeah.
Yeah. As you said about internet redefining the whole business landscape, like in retail or in any other businesses. और ये बात भी बहुत सही है कि काफ़ी businesses जो पहले चल रहे थे, growth थी, अब वो because of internet they are not able to cope with the internet companies. So how do you you talked about the QGLP theory, where it's sort of limiting the universe to that QGLP formulae. But it may happen that कि कोई कंपनियां यहाँ से वहाँ चली जाए, वहाँ से कहीं drop हो जाए. So how are you going to sort of balance yourself and exit or enter into various companies, seeing the dynamic scenario?
Yeah, see, one of the thing is that, I mean, basically, you don't do what you don't understand. So you don't have, see, we need only 15, 20 stocks. There are 5,000 stocks here. And we don't have to necessarily buy from internet stocks. First thing is there are not many internet stocks listed here. And in any case, I understand very little about internet-based companies, profits and how it will shape up in next 10 years. So it's not a very difficult, because you don't have to sweat about something which you don't understand. Let the guys who understand, let them make money. There's so many other stocks. We need only 15, 20 stocks. So for me, it is very clear. You know, I mean, a lot of these new things will keep happening. Today it is internet on retail, something else will happen somewhere else. You don't understand them, so you have to stay away. So for me, it is very, very easy. Yeah.
Yeah.
What do you, when you decide to sell a share, what are the factors you consider before you take that decision?
What is that?
When you're selling a script, what are the factors you consider before you take a decision to sell?
Okay. So I mean, as far as this selling is also a very difficult thing to say that this is the perfect way to sell. You know, we have two, three reasons for which we sell. One, if we are wrong. The moment we realize that whatever our thought process about the company is completely wrong, baseless, we'll definitely get out, even at a loss, massive loss. You know, because if the story is not going to happen our way, we're not going to make money, period. So let's better cut the loss. So like financial technologies, I mean, we bought with a lot of conviction, but the moment we realized that we are in the wrong foot, at lowest price I sold, at 155 I sold. I knew nobody is there behind me. I mean, after this is the lowest price. Still I said, I don't want to die every day. Let me be done with one day. I sold it and I'm better off now. I use that money to buy something else. But what happens is, see, you know, that allows you to think afresh about that. Second is, when the companies commit mistake. I mean, say Tisco going to having bought, say, Chorus, or Bharti bought Zen. See, whatever their thinking might be, they are big guys. We cannot influence their decision, they have already done it. It is for us to give the stamp of disapproval. And the way you do it is, you sell it. In Ranbaxy, when Malvinder sold it, before he got the money, we got the money. So, you know, either we are wrong or they are wrong. Or third is, it is so good that stock has gone 5, 7, 10 times. Your 5%, 6% allocation has become 18%, 20%. You have to cut it. Like L&T in 2007, it became 17%. We sold half of it. And we brought it down to 8, 9%. And after the market went down, it became 4%. Then we sold very recently Bosch, Aisha, I think Page also. So we trimmed it at the top. So, I mean, these are situations where we sell. Pardon? Yes. Yeah, so still whatever we hold, I mean, this is the dynamic kind of situation. We have not bought these stocks at some 400, 500 rupees for you. So, you know, one of the ways you create 100 baggers, actually if you go into the study, you go and see the study, it is SQGLP. The first requirement is you got to buy small and relatively unknown. Today, it is very large and very well known. I mean, FIs are dying to buy into Bosch at 85 P multiple. You have to give some bit of it.
Yeah, Raamdeo, if you...
Where is? Yeah, please.
If you spotted a company which is very good business, but the management is questionable. Of course, I remember you've answered that question. In the scheme of this formula of yours of investing,
Yeah.
what is the percentage that you would attribute to the questionable management, and to what extent would you be prepared to compromise on that?
That's why I got into FT. I compromised. So 1 multiplied by 0 is 0. If I realize that it's the management, a compromised management, I will not go there only.
There are, there are many companies which are very visible today in the stock market,
Yes.
where the businesses appear to be
Good.
very great, but even the management is very sort of questionable. That is also very visible. But despite that, there are lots of brokerage companies and lots of investors which keep on chasing these kind of companies. How would you personally react in this a method of investment of yours?
Yeah. So, of the competence and integrity, if by chance competence, everybody is not at the top. If it is at the medium level, I may still buy it because the business is very good. But if I have a doubt on the integrity of the management, then absolutely non-negotiable. Absolutely non-negotiable. No. Just don't go there. That guy will never be able to deliver you. He will never deliver. He will make money. All the builders are what? Why these builder companies they are making tons of money. All the shareholders are gone pauper. Because there is nothing in the integrity of the builders. Books are written only in Lonavala. How will you make money? They are making money, we know for sure. If you buy a flat at 40,000 rupees square feet, 50,000 rupees square, obviously they are making money.
But there are managements also which don't pay salaries. Despite that, they have got exponential valuations.
Yeah, so see, in the market you will find all kinds of companies and there are all kinds of ways of making money. I am saying this is a very narrow 2% way of making
what
money.
I'm saying is, would you avoid them?
Completely. See, out of 5,000 companies, if I want only 15, 20 companies, I have to say no to 4,980 companies. So I have to find reasons also, no? So these are the reasons. Either business is bad, or management is bad, or growth is not there, or there is no longevity of growth, there is only 2 years kahani, or it is very expensive. See, these are the only 4 factors in which 5 factors you have to play. If anything is missing, it is 0.
Thank you.
Yeah. No,
I have a question here.
let's go one by one.
So have you, in your most recent study, identified the sectors for the next decade or two that you think are going to really outpace what you've seen before?
Can you just speak up? Sectors which are going to?
Outpace the growth that we've seen before.
Yeah. So we gave the framework that all the discretionary spend and companies in that are going to make a lot of money. Now at what stage you buy? Say in banking, you see you're given birth to HDFC Bank, you're given birth to HDFC. There will be a housing finance company because opportunity in a housing finance company today for mortgages is multiple times bigger than what it was in 1980. This is a brown piece of land, this whole country. So, but then, there will be a company which will come up and say that I'm the next HDFC. Or there will be a bank which will say that I'm the next HDFC bank or better than HDFC bank. I'll use much more internet and technology than what HDFC is using. So, it can come from anywhere. Like, say, Aisha, like the Royal Enfield motorcycle. 4 years back, nobody bothered about Royal Enfield as a company. Today is most aspirational motorcycle company. So, all this discretionary spend. There are companies you can see some of the services which you would never think that will become big might become 100 times, 200 times bigger. Like booking services, like it's not considered as very large service. But go and see in Hong Kong what is happening to the broking companies. mean, the volume in Hong Kong and Chinese market is like $200 billion a day, cash market. Here we are doing $2-3 billion. We will hit those positions, mind you. So you have to see which companies geared up for doing that, and can you buy those stocks? So there are exponential opportunities because the world is becoming crazily at very rapid pace. Financial markets particularly is becoming literally on the laptop. I mean, you don't have to go anywhere. You can sit in any farm with internet connection. You can do what, you see that flash crash today? The US authorities have nabbed one Indian, some Sadarji, who was trading in London, and he caused 10 or 15% decline in the market in US. I was in US at that point of time. It created so much of chaos, and they've tracked him down. I mean, it's crazy that one poor chap sitting with $20-30 million, and he caused global chaos. I think that case will not stand against him. But, I mean, the authorities, they are blaming him. So one trader sitting in rented premise in somewhere in outside London, causing global turmoil. That's the power of technology. So if downside can be so massive, upside will be even bigger. And these markets are crazy. See, what is stock market? Stock market is present value of future anticipated profits. What profit will come, only God will know. See, who knows who's going to make how much money? But today, the opinion is that TCS is going to make multiples of 5 lakh crores. See, today I'm buying at 5 lakh crores. So I will not pay 5 lakh crores valuation unless I think that it is going to make at least 10 to 15, 20 lakh crores. Why should you pay? But whether it will make 15 lakh crore profit or 50 lakh crores profit, who knows? So it's about the opinion. So stock market is a crazy system. Somebody thinks that Flipkart is going to make, I mean, if it is 60,000 crores, Nestle is 60,000 crores, and Flipkart is also 60,000 crores. So somebody thinks that Flipkart is going to make more money, multiple times more money. They are dying to buy Flipkart shares. In next 10-15 years, I mean, like, they are going to make some 2-3 lakh crores profit. You go and ask them. They say, we also don't understand the valuation. And I'm not joking. I was with one of these 3-4 guys. They said, we don't understand valuation. We understand our business, we'll make money, but we don't understand the valuation. So I said, this is how we value. Sir, we don't have any clue to this, that how much money we'll make, but we'll make money.
We can take one last question.
Yeah.
And close for the evening. Yeah.
Sir, it's very easy to say for
Yeah, just one sec. Yeah. Please.
it's very easy to say 10x, 100x past 20 years, you know.
Yeah.
But even good businesses go through bad phase of time.
Yes.
And what makes you hold them that time?
Yeah, so the point I said, whether you understand the business, the 99% sweat in investing and analysis is whether you understand. We start valuing things without understanding it. If I say you're a billionaire, because from face you look to be a billionaire, is that fair? It's not fair. I have to get into, I must sit with you, what is your balance sheet, how much you earn, then only we can figure out whether you're a billionaire or not. But when it comes to valuing a company, you look at P multiple 5 and you say you're very cheap, and somebody is 50P, you say it is very expensive, as if you know everything about them. The biggest crisis of the market is that everybody knows the price and valuation without knowing the underlying values. The process is to know the values first, then do the valuation. You'll be in much better shape.
In your formula of investing, how much credence do you give to political stability or instability?
See, these are important, but we can do nothing about it. So it doesn't matter much. Yeah, every day morning it's a new news. Go and listen to, if you are frustrated, go and listen to 9 o'clock show. What is that called? What is the Times of India? Arnab Goswami. I think he'll set you right. So, as far as investing is concerned, these things will keep happening. Someday somebody will commit suicide, some banker will commit suicide, so it doesn't really matter. Eventually this is very important. What kind of leadership? So what excites today? After 30, 40 years, you've got a leader who wants to die for this nation and die for the development of this nation. Not as a patriotism just like that. I'm a Hindu, so I want to die for this nation. No. He wants to die, he wants to dedicate to uplift the whole nation and become a global leader in the process. You don't get, this is like Narayan Murthy in Infosys. You don't get this. I don't know, this country is crazy. I mean, even leaders can perform only if somebody follows. It is a time to give him opportunity. And in 10 years, see, in 10 years in Infosys, you made it 1,000 times, 2,000 times. That's the opportunity for India. If Modi really happens, see, if it, right now Modi has not happened. So that's why this valuation and this skepticism. But जिस दिन होगा, मोदी का चरखा चलेगा, आप देखना फिर. So 10% downside and multiples of 10 times into the future. If you have courage to lose 10% from the current valuation, come into the market and buy it tomorrow morning at 9:15. Don't time the market. You know, that's the opportunity. You don't get these leaders every day. Mahatma Gandhi doesn't happen every. Mahatma Gandhi is, I mean, even Nobel guys they couldn't figure out. Their biggest grudge, they never awarded Nobel Peace Prize to Mahatma Gandhi. And he was considered as man of the century. Somebody said, somebody Gandhian who is 85, 87, I forget the name. He said probably this guy is a greater guy than Mahatma Gandhi for the nation today at this point of time. He is far more relevant. So, you know, when this kind of leadership is there, you know, you have an opportunity. Give him an opportunity. Give him a chance. 5-6% will do it not because of Narendra Modi. We'll do it because of ourselves. The entrepreneurs, the demographics, the land itself. So we don't need Narendra Modi for 5-6-7%. We need him for 10-12% sustained for 10 years. Then you see what happens. And there is a good chance. I'm not saying it is 100% chance. Stock market is everything about the probability. There is a good chance. I mean, it is better than 50% chance that this will happen. And there is a 30% chance that it may not happen. For that, your downside is 10%. I'm telling you, no? This is how we think. Downside is 10%. If you don't like 10% downside, don't come to this market. And if you are willing to take that bet for 3 to 5 years, 10 years, with 10% downside, buy right and sit tight. It will do for you.